Today, I want to talk about a topic that has been covered several times by many other creators in this space, and that you have probably heard 1,000 times already, which is journaling. I know, bear with me. Journaling is your best friend when it comes to trading. It not only helps you remember and recognize patterns in price action more easily, but it also works as a way for you to lift things off your mind. But during the past couple of days, I found that the real power of journaling does not come from just recording the trade you took right after it happened. It comes from starting to write down your thought process and what to expect from the market before everything happens. Let me show you an example so that everything makes more sense. You're probably used to hearing creators in this space tell you to journal your trades so that you can keep track of your mistakes and avoid repeating the same losing patterns. For me, that did not work. Every time I took a loss, I would just close my computer and crash out completely. I couldn't go back and review anything because the emotion was still too raw. The journal just became a list of things I did wrong, and looking at it made me feel worse, not better. What I found working best for me and my weak psychology was starting to journal my thought process hours before my entry window, which is after 9:50 a.m. New York time. As you can see from today's journal, I started commenting on what I'm seeing in the charts at around 6:24 a.m. New York time, which for my time is around noon. At this point, I usually mark out the levels I tend to refer to the most during trading: previous session highs and lows, SMTs if present, for value gaps on the higher time frames, the midnight opening price, new weekly and new daily opening gaps, etc. After that, I started imagining possible scenarios that might happen throughout the day. I usually do this by literally drawing on the chart the direction I expect the market to go. By doing this, I prevent myself from taking setups that are outside of what I can see in the market with a clear and stable state of mind. I don't know if this has happened to you guys, but I cannot even remember how many times I've executed a setup that I've never seen before, or that I would have never chosen as high probability, just because my mind was completely off in the moment. So by doing this pre-market work, I make sure that I'm in control of the market and not the other way around. I only execute what I want to see, not what the market is throwing at me in real time. What I also really like to do when we get closer to market open is to write brief comments on what price action is showing me in real time. This way, I can tell whether price action is moving in a way that feels predictable, something I feel confident in, or whether it's just noise. In today's example, after the 8:30 CPI news came out, price ended up spiking to the upside, taking out buy-side liquidity at the Asia session high and creating an SMT with ES. From there, I noted that we could either continue higher or retrace lower towards the Asia and London lows. Based on what I was seeing, this was pointing back to the first scenario that I'd drawn out at 6 a.m, where I said that if price sweeps the Asia high, we might see a retracement lower. At this point, I feel in control of what is happening. I'm confident because I could already see this outcome playing out before it even happened. After the 9:30 open, price rushed to the upside again, creating another SMT with ES and showing signs of a possible AMD setup, which, if you guys don't know what it stands for, AMD is basically accumulation, manipulation, and distribution. If you want to dive deeper into this concept, there are plenty of YouTube videos that you can look up. Just search AMD and you'll get a lot of information from there. But for me to go short, I needed more confirmation and more narrative behind it. I was still waiting for 9:50 to 10:10 macro window, but I had already noted that today's price action seemed quite choppy. After the open, I usually expect price to have more volume, a cleaner manipulation, and none of that was present today. At 10:07, price action was still looking really bad, no displacement whatsoever. We were just accumulating inside that volume imbalance. Since none of the scenarios I had prepared in the early morning played out in the way I needed, I decided not to take a trade. And the good thing is, I was completely fine with that. If I had skipped all of this process, I can confidently tell you that I would have either taken a bad setup, or if I hadn't, I would have spent the rest of the day angry at myself for not taking any trades. I know myself well enough to say that. So for me, this is the real power of journaling. Not just recording the trade you did or didn't take, but using it as a way to analyze the market through your own eyes before the session starts, before the emotion kicks in. If you're someone like me who finds it hard to accept losses, who finds it hard to be accountable for the decisions you make, I really encourage you to start implementing this in your day-to-day trading, because even if today had been a loss, which has happened countless of times before, I still would not be mad at myself, because all I did was just follow what I believed was right, and that for me is enough. If you guys are interested in seeing more of this kind of content, let me know in the comments. Thank you guys for watching the video, and I'll catch you guys in the next one.